Welcome everybody to Mr. Keith's Money Monday. This is the second account we work with. It's a 50,000 plus account. Right now I've got about 100,000 of this account. For recording, we are using the paper trading account, so it's about 100,000 also, but I've tried to simulate my real account with this one. Goal of this account is to generate 500 bucks. 400 to 500 is kind of what we're going. I should put that in there. Let's say 400 to 500. Some weeks Whoops. Some weeks it just doesn't quite work out to 500. 400 to 500 a week cash flow. By using options, hopefully I'll be able to use the money to buy more stocks and I don't have to spend it and just kind of grow this account. Understand this is a journey of my account and I share it with you for informational purposes only, not providing legal, accounting, or financial advisory services. Not recommending any of these trades for you. Remember, if you copy these trades, we could lose money. Sometimes I don't have time to record it and turn it into you guys and see what's going on. I just do it in my account and I'm done with it. So understand and get the education you need to be able to manage the risk. Use a paper trade account till you're ready to use real money. And please like and subscribe to this channel if you like to follow along with what we're doing here. This is our trading log of what we've done so far. We started on beginning of the month. We did 6 trades that first week. 5 trades the next week, and 5 trades last week. So nothing's closed out yet. So I haven't finished what we're doing here and seeing how we did. Most of the positions are pretty good. We have one position in XLE that's getting close to our strike prices. Our 53.48 is what I did in my real account, but on here, on the paper trade account, I did the 54.59 spread for some reason. So just kind of messed that up in between my real account and this paper trade account. So let you know, my live account, I got the 53.48 spread, and if we go to our paper trading account here and see what we got here, you can see we did a 54.59 count. And you can see that's actually in the money now because I believe the stock, it's been trading right around 54, but it has dropped down to 53.58. This is a nice pattern here to look at. If we just look right here, this is a head and shoulder pattern. I talked about this in the other video I did. Head and shoulder this is the left shoulder, this is the head, and this is the right shoulder. And when you see a pattern like this, it's usually a turn downward. And what can happen, statistically speaking, of course, we never know exactly what the future holds. But looking at this, you can see this hit 59.60 here, came down to 55, went up to 61, we'll call it, came down to 55 again. Went back up, but you can see it didn't get up to that high again. It hit that 59 right there, 60, kind of topped out both times. Tried to get there, but it acted as a resistance and the stock is going down. XLE is the exchange traded fund for oil companies, and of course with the war maybe winding down, oil prices have come down, so we'll see what happens there. And if this does come back down, we can see it coming back down to where it used to be, maybe down to 46. It can come all the way back down that way before the war happened. With a head and shoulders pattern, they usually say the neckline. You go from here, which is, we'll call it 55, 56, and the top of 61, we'll call it here, 61. That's a 5-point spread, so it could drop 5 points from here. So if that's 56, we can go all the way down to 51 again. So I could see this stock going all the way down to 51. Wouldn't surprise me. Which would mean our spread is in the money and we'd be losing money. So what I'm going to show you how to do is close that out, roll it out. So usually we call that rolling down and out, but I'll show you each step individually here. So we have this one here. Single, you can see our spread 54, that's in the money. My 53 is not quite in the money yet, but if it goes down to 50 like I think, or 51, then mine will be in there. So what we'd want to do is do the opposite of what we did. So we sold this one and we bought this one here. So we have to do the opposite. We have to buy this one and sell this one up here. So we got, what did we get on this one? I think we got about 40, yeah, 40 some dollars per contract. So we made $120. So if we go close that, let's see if I can, I'm not used to closing it on here. I usually do it in my create closing order. Create closing order. There we go. So we sold that one, so we're going to buy this one back, create closing order. We can hit create, analyze the trade. There we go. Let's do that right there. So if we analyze that trade, we lose $207. So we got to buy those back. Each one will cost us $125, so that'd be $375. We're spending to get back. We made, 100 some, so the difference would be the 207. So closing that out, confirm and send. So we're actually spending $378. So we brought in $150 some. So that's our 207. I'm going to send that in. And while we're waiting to get that filled, hopefully it gets filled here. It's working. We'll see if that happens. I'm going to show you the trades I did do this week. I did IBRX. I've got, in this account, I've got 900 shares. I had some calls expire last week, so time to go in and sell some new calls. So I'm going 60 days out. Usually I like to go between 30 and 60. So you can see the July ones, which we have been trading, and we do have a couple positions on that, is under 30 days. So don't like the weeklies, so I usually go out to the traditional monthly ones. And I sold some $10 calls here, and I sold 3. So I sold 3 IBRX $10 calls that expire on August 21st, and I got in my account 35. So let's see if we can get the 35 in this one also. So that's promising to sell it if it goes above $10, and right now it's trading at $7.32. So if it jumps up above 10, then I'm selling 300 shares at $10 a piece, which is okay because I bought these things at $2-3 a piece. Confirm and send that. Get a credit of $103 minus the commissions there. So that was one covered call I did. Another one was Oak. I love my one Oak. All right, so we got the IBX done. And here I did another, I went August again. I sold a $95 call. And if you look at the charts for August, out here, high range of 97, we'll say, low range of 75. It's just been chopping right here. If the oil industry goes down, then it could come back down here. If the oil war goes on, who knows? One Oak could shoot up again. But I'm looking at this topping pattern right here. Twice it hit 95 and stayed there. So that's what I'm looking at. So I sold a 95 call out here in August. So went in here, click August, 95 call. I got 115 for it in my live account. Now remember, I have 100 shares of this. I actually have 400 shares of this. So I'm selling one covered call, promising to sell it if it goes above 95 by August 21st. Okay, so selling one Oak 95 call for the August 21st expiration. 115. Let's see if we can get the 120. I got 115 in my live account, so I'll put that and we'll see what it fills it here in this account. All right, next one I did Verizon. All right. VZ, Verizon. I own a couple hundred shares of this one. Looking at the chart, hit this nice 50 up here, then kind of settled down. Just kind of been trading here. We have this spike, but I'm thinking not above 50 by August. You can see it's right there at the edge of that probability cone. So we'll see what happens. We do have an earnings announcement, and usually I don't like to sell covered calls before earnings, but I'm going to head and do it anyway. You can see here this earnings call, it really shot up. So could have something like that happen. And this earnings call just kind of stayed flat. This earnings call kind of went up a little bit and kind of came back down. So this is a abnormality here. But you never know. It could happen. So that's why sometimes you don't want to trade options through earnings. But we're daredevils here, and I'm just going to put a $50 one out here, and we'll see what happens. You can always roll it up and out if I need to, buy it back if I need to. But 50 is kind of right that edge of that probability cone. So going in here, 50, and I got 41 cents in my live count earlier when I did this. But stock may have gone up since then, or gone down, actually. All right, but I only have 100 shares to trade, so I'm selling one Verizon $50 call. So again, if it goes above 50 bucks, I'm promising to sell it at 50 bucks. My average cost for Verizon is about $40. So that would be a nice profit if I get called out. All right, my last covered call I did was Lyft. Lyft, I have a couple hundred shares of this in my account. If you go to monitor, I've tried to simulate what I have in my account here. Some of these I don't have anymore because we used this account a long time ago. So some of these things Dow don't have. This one got bought out, so it's not there. H&R Block I don't have, so I need to go in and sell those. But I bought in here, I bought the Lyft, 200 shares. Looking at the chart, they have earnings coming out 8.5, and I did sell. Oh, this one I did a 7/31 strike or expiration date. So they have weeklies, so I was able to get an expiration right before earnings, because you never know. As I said, earnings, it could shoot up, shoot down. So I like my options to normally expire before earnings. So earnings here was 8.5. So this one I sold a 7/31 right in here. And I sold a $17 call right up there. So not thinking it was going to get up there. You can see it's just been chopping along right there. So looking at the trade, I went to the weeklies and show you something real quick. The open interest right here, you can see how many contracts are being traded, and there's not a lot. So this is very illiquid. If you want something to normally trade, you want something that has lots of contracts, you can see open interest, there's 28 total. 2 of these were probably mine I did in my real account this morning. So not much is trading here. You can see more people are at the 1750, but I went 17. So I sold this one right here, and I got 25 bucks in my account, and I have 200 shares of this, so I can sell 2 contracts. So selling 2 contracts of Lyft, July 31st, a weekly one of a $17 call. Again, my average price of this one is about 14 bucks, I believe. So if I sell it for 17, no problem. Then I'd go and sell the puts to try to buy it back. All right, so I sold 2 of those. I got 25 bucks in my live account, 50 bucks. So in this one, we're looking at 40. And then one last trade I did to get my 5 trades in for the week. Coke. Coke's chart been shooting up, kind of a nice pullback here, coming down, touching this moving average here, this 20-day moving average. Sometimes it'll hit that and bounce off it. You see it could go lower. See what happens here. Coke is something I do like to buy, and I usually use the money I make from the options to buy Coke. So I own 20 some shares right now. Let's see. Yeah, 20 shares. So that's all money I use from options to buy that. So I haven't spent any real money, we'll call it. We'll just call it option money to buy these shares. So every time I make some money in Coke options, I go buy a share. I would like to buy it if it ever does get low. I've been trying to buy it since it was in 65. Should have bought it then, obviously, but didn't. And I bought shares just as I've been going along. Option, they got 721. They've got their earnings call. And we look at earnings. It can gap up there. That one kind of went up a little bit. This one jumped up. So it can jump up on earnings or jump down depending on what they do. So I'm going out here, and I did a 75-70 put spread. So that is inside the probability cone. The reason I chose 75 is because right here, you can see every time it hit 74 or something, it bounced off. So I'm hoping that it would bounce off that again if it were to go below that. So that's what I'm looking at. Looking at this as a support level, hoping that people come in and buy it. Again, I would like to buy shares of this, so if it does drop lower, then that might be a good time to buy it. So what I did here was I put credit spread. I went to August 21st. I did go out the whole 60 days here. Going up here, now let's look at that open interest here. You can see probably they've got a lot more contracts here. So I did a 75-70 put credit spread. You can see all these contracts, thousands of contracts here. A lot different than the Lyft one, where it's not being traded, especially that weekly. Weeklies are not traded as much. So you can see this one's got thousands of contracts. If we were to go the week before, see, not as many contracts. So the monthly ones, the traditional ones, you can get a lot more volume there and a lot more liquidity. Your bid-ask spreads would be closer also. So what I did here, let's go back to our delta gamma. So 75 is a delta of 20. So they're saying like a 20% chance, 21% chance that it could get down there. Usually I do 15, but you can see we drop from, we go from 20 down to 13 down to 8. And I could do this 72, 50, 60 some spread. That would be more in line with what I normally do. I could probably get 50 cents there and maybe 20 cents there, so that'd be only 30 bucks, which is, you know, the low end of what we normally get. I'm going to do the 75-70. So I'm going to click vertical. I'm going to just click on this 75 one, and I did 2 contracts. And I got to change this to 70. Oops, too fast, too far. 70, all right. So I'm selling 2 of the 75 put and buying 2 of the 70 put. That way I don't have to have the full 7,500 bucks per contract in the account. And I got 54 cents. I got 55 in the real account. Let's go and analyze that. Take out the stock I own. All right, so you can see the probability cone. It does fall in there for August 22nd. Right now it's at 70. Is that 79? Is that what it's at? 79.82. So right here, it's right here right now. So it'd have to drop all the way down here. So we're looking at making 108 bucks. Look at this right here, 108 bucks. The most I could lose is 892 if something crazy happens and everything collapses. Usually Coke goes up when SPY goes down. It's a more defensive stock. People think, hey, everyone's going to buy Coke and drink Coke. So I've seen Coke go up when the S&P goes down. So we'll see what happens there. All right, so this is our trade. This is our risk graph. Maximum loss that. If I go and click confirm and send, you can see my buying power. It only takes $892 in my account compared to if I just sold a straight put at 75, I'd have to have $7,500 in my account. So this is a way of limiting your risk, not using as much money. So using $100, making $100 on a basically $1,000 we're putting up. So 10% on our money for 2 months, not bad. If we can do that 6 times a year, we're making 60% a year. So gonna send that in, and we'll see what happens there. So we didn't get filled on our XLE yet. May have to change. Oh, did it get filled? Looks like it did get filled. All right, did get filled. The working one is the Coke. So Coke is still working. We got filled on this one. So we spent $125 for that one. And so if we wanted to go back in and try to make some of that money up, I'd go back to XLE. XLE. And again, looking at that chart, we believe it's going to come down to, it could come down to like the 50, 51 mark. So we could wait and see if it comes down there, or we could do it now. We never know what's going to happen. But let's wait. Let's wait and maybe see what happens. I could go trade. I could go out to August. I could go out to September. I could go farther out. All right, Coke got filled. I could go out and say do a 50. I think we did 3 contracts in that one. 50, 45. We could get $69 per contract if we go and analyze that trade. We're going to take this out. So we could make $207, and I think from when we closed it out, it cost us $200, $210 if you think back to what we did. So basically we could recoup all the money that we lost in the previous trade. Now again, now we're risking $1,200. If it really collapses and comes all the way down to 45, we could lose that money. So risk and reward, what you want to do. What I'm going to do in this account, I'm going to put it at 75, and I'm going to make it good to cancel. So I'm going to go back here, put it good to cancel, and I'm going to leave it at 75. That's above what it's at right now. So that means the stock price has to drop down. And why am I doing that? Go to the chart. Went to the chart. If it continues dropping down, we'd make a little more money for that. So I'm just going to leave it there, see if it comes down, see if we can get the 75. If not, then we'll do another trade. So you could put it at 69 and get it filled right now. And maybe it stays right here, and maybe it jumps off this level. This could be the low, and it could go higher. So, or it could keep coming down to the 51. I could see it coming all the way down here. So we'll just leave that in there. Of course, now I'm putting a contract all the way out to here, so I'm taking more time. That's how I'm making a little more money, by selling more time. Because this will go all the way out to September, which means our probability cone, they have it all the way down to 47. So we're taking a chance it could go all the way down here. So we're going to put that one in. 75. I think I just have one set in there. Did I confirm and send it? Order history. 0 working. XLE. So I did not send that in. That one. All right. So I'm going to put it in for 75. I'm going to confirm and send. So it could get $220. That will cover our commission fees for closing out the other one and make up what we lost. All right, so that will sit there. There it goes. Now it's going to be on the chart. Forgot to send it. So it's going to sit down here. If this drops down a little bit more, then it will pick up that contract for us. So we'll see what happens. We'll watch it. All right, so there you have it for this week. Sold some covered calls and stocks you own. Sold a put credit spread on Coke, promising to buy it if it goes lower. And adjusting XLE, since it has been dropping down. When we originally placed that trade, it was right here. So thought it could just keep going up. Was wrong, went down. And head and shoulder patterns could come all the way down to about 51 is what we think. So there you have it. Have a good day. Bye.